Hey everyone, Nvidia updated investors with their latest quarterly results after the markets closed on November 21st, and boy did they deliver another phenomenal quarter. Nvidia is at the epicenter of the boom in artificial intelligence. Its graphic processing units are used to train AI models and the inference that goes along with that. Nvidia has experienced an absolute boom in revenue. You're going to get a look here to see just how big that boom was in the most recent quarter. So let's jump right into these results here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Revenue in the quarter jumped by 34% quarter over quarter to 18.1 billion. That's quarter over quarter. Year over year, revenue jumped by 206%, a massive increase from Nvidia. Remember, at this same time last year, Nvidia was struggling because industry-wide there was a slowdown in computer purchases, in graphic processing unit purchases, and Nvidia was working through excess inventory, not only of its own, but in the channel through its retailers. There was too much inventory of its GPUs in the system. Boy, has there been a flip of the script here in 2023 as Nvidia has experienced the boom in demand from AI. Not only that, but its gross profit margin jumped to 74%, up from 53.6% in the same quarter last year. So not only did Nvidia's revenue jump, but also its gross profit margin jumped. So it's not selling these units at lower prices or offering promotions or incentives or anything like that. This is just organic demand for its products, and Nvidia being able to meet that demand effectively. Now, throughout the pandemic, you would have seen several businesses that experienced a surge in demand for its products, but they were unable to meet that demand effectively. It's not easy to service a surge in demand for your products, right? All of a sudden, more and more people want your products. It's not easy to service that increase in demand, right? Nvidia did that magically in the last 2 quarters, being able to meet this surge in demand from artificial intelligence. Now, operating income also jumped to 10.4 billion. That was up from just 600 million in the same quarter the prior year. Another massive increase overall. It's hard to find any fault with Nvidia's performance here: revenue, gross margin, operating income. A little bit later in this video, I'll show you the one thing that was a thorn in Nvidia's side in the current quarter. But other than that, everything looks phenomenal for Nvidia. Now, what's going to happen here as I'm looking at this from a strategist perspective, understanding business and how business works? When you've got a company that's generating 74% gross profit margin and you've got sales booming the way it is, ultimately it's going to lead to competition. Right now, as we speak, competitors are thinking up ways to increase supply of products that will compete with Nvidia's GPUs because of these explosive margins and these types of explosive revenue, and understanding that Nvidia still has not enough supply to meet the demand that's in the market right now. So competition is jumping in. I know Amazon has said it's launching chips, it's increasing supply. Microsoft said it's getting in the business. AMD, its rival from a long time, is increasing supply, and on and on. I wouldn't be surprised if supply in this category continues to increase significantly over the next few quarters. So Nvidia's got is a step ahead right now. It might even be 2 steps ahead of the competition, but it's got to work to stay ahead because supply will be increasing. It's rare for the business community to allow one company to thrive the way Nvidia is without increasing products of their own and supply of their own. So Nvidia reports its revenue by segments, and the segment that's booming is the computing and networking segment. That's the segment that saw revenue up 284% year over year. Meanwhile, its graphics segment was up, I say only 64%. That looks small compared to the 284%, but it's still excellent growth to be sure. And within that computing segment, the data center is where all the AI compute capabilities are, and that segment is where revenue increased 279%. And surprisingly, the automotive segment, this is where Nvidia supplies their graphic processing units for automotive manufacturers that are working on developing driverless technology. This segment had been a strong growth engine for Nvidia, although it is small, but it was only up 4% year over year in the quarter. That was a bit surprising to me, and that could indicate some of the troubles in the automotive industry, especially in the EV, some of the EV companies like Tesla and others that are trying to increase the availability and effectiveness of driverless technology. They may have pulled back investments in that category, although if you listen to Tesla's latest earnings call and you watched my video on Tesla's latest earnings, you will have noticed that they increased their spending by the billions of dollars on research and development. And I thought that that investment could have been coming from Nvidia's GPUs. That's Tesla's main go-to for the GPUs. So this was a little surprising to me and interesting also. So in explaining its phenomenal results, Nvidia said they experienced strong sales of the Nvidia HGX platform, which were driven by global demand for the training and inferencing of large language models like ChatGPT, which I'm sure you've heard of, recommendation engines, and generative AI applications. Now, large language models have been getting all the attention in terms of artificial intelligence, but the recommendation engines have been a undercover beneficiary of the rising effectiveness of AI. If these recommendation engines can get better, that can drive significant performance improvements for companies like Amazon and Alphabet. Think Amazon, their recommendation engine, when you're going to shop on the platform, if they can surface products that you're more likely to buy, that can increase sales on the platform. Even if it increases sales on the platform by just 10%, that would be a $50 billion annualized rate of growth there for Amazon in revenue, because they generated over 500 billion in sales in its most recent year. So a 10% improvement as a result of recommendation engines improving would be huge. Now that would be a unlikely scenario, but I'm just highlighting a point that recommendation engines carry a lot of potential to drive revenue and drive profits for businesses, especially large businesses. And then also thinking about content, right? You're probably watching this video on YouTube. If YouTube can do a better job recommending videos that you're more likely to watch, you're probably going to spend more time on the platform, and that gives YouTube more opportunity to show you ads, which will drive revenue and profitability for YouTube. So these are recommendation engines that could benefit from the rising effectiveness of AI, and I think they're like an undercover beneficiary because so much attention is being given to the large language models. Here's the area where Nvidia had one slight hiccup in the quarter, and it's not its own fault, right? Their sales to China and other effective destinations derived from products that are now subject to licensing requirements have contributed about 20 to 25% of data center revenue over the past few quarters, and we expect that our sales to these destinations will decline significantly in the fourth quarter because of regulations. Remember, the US is restricting exports of certain technology to China and other countries, and that's going to hurt Nvidia by 20 to 25%. But I'm going to show you a little bit. It's not seeming to phase Nvidia if you look at their forecast for the next quarter. So I'll show you that in a little bit. Okay, so I was talking about the forecast for the next quarter, where Nvidia expects revenue to come in at $20 billion. So that would be ahead of what they reported here in the current quarter, which means that their demand for their products are still significant and growing, and it's unlikely that Nvidia has enough supply to meet all the demand. So it's not really going to be negatively impacted all that harshly from these export restrictions. At least it doesn't look like that's the case looking at Nvidia's guidance. And gross profit margin, same thing. They're expecting 75%. So an improvement from the previous quarter in gross profit margin. If you were thinking it was a fluke, it was not. Nvidia saying, you know what? No, it's not a fluke. We've got, we're going to deliver these kinds of profit margins again in the next quarter. So to answer the question I posed in the headline, and update my recommendation of Nvidia stock. I'll remind you, coming into this quarter, I did have Nvidia stock rated as a buy. I upgraded Nvidia stock to a buy, I want to say 3 to 5 months ago. And I'm keeping Nvidia stock rated as a buy after this quarter. If anything, I'm upgrading Nvidia stock closer to being one of my top stocks to buy right now, although I'm not making that upgrade all the way up just yet. I want to get some more information, do some more analysis in Nvidia. But for now, I'm keeping it at least at a buy and making it an even stronger buy than I had recommended coming into this quarter. That's how good I think this quarter was. I think the one bad news item coming out was the China restriction going to impact the company. And looking at the stock price after hours, it's down by 1%, which is surprising to me. I would have thought with a quarter like this, the stock price would be up somewhere between 2 to 4%. It could be because the stock price is already up so much in 2023, and it's been up so much over the last few months that investors were already expecting a phenomenal quarter from Nvidia, which it delivered once again. So to reiterate, yes, I still think Nvidia stock is a buy, even though the stock is already up so much. I think it's deserved. I think they've earned the stock price increases by delivering strong revenue and profitability. So before I let you go, if you gained any value from the video, please subscribe to the channel. It really helps me make more videos just like this one. Thank you so much for watching.